redefining crypto regulation and embracing uncharted territories. This is basically like a really hot topic right now, where we're in a landscape marked by innovation and transformation, and the regulatory framework surrounding cryptocurrencies stands as a cornerstone for progress and stability. We have our experts assembled here, each offering a unique perspective on the regulatory landscape. Please give a round of applause to our expert panelists. So without further ado, I'm sure all of you are excited about this panel. We'll direct our first question to Gaurav Singh Mahur. How do you perceive the current state of crypto regulation globally, and what are the key areas that require immediate attention and reform?
So when you say regulations, it's a very complicated term, especially when it comes to financials and securities, right? And crypto has been all over the place for the past few years. Like after the financial bull run in 2020, we have seen a lot of improvement and progress when it comes to compliance and AMLs, anti-money laundering, obviously. And right now we are making like baby steps, I would say. Like the regulations that should have been in place like 2 years ago are now being applied in the financial security systems. Obviously, when it comes to introduction of crypto and Web3 to normal people, education and training needs to be there. So that would be like one of the first steps that we should take in educating the normal people who are not into Web3. The crowd itself is like very obscure, like not like even if like there are people who claim to be in the blockchain space for like years, if you ask them what's blockchain technology, they will fumble. So education needs to be there first, followed with compliance, and then we need to focus on the AML and KYC processes. Yeah.
Thank you. Would any of the rest of the panelists like to add on to that? Right. I would move on to the next question. The next question. Sorry.
Are you leaving that question behind now? I'd be happy to add to it. So,
yeah, sure.
State of regulation in crypto. My take is it's pretty poor. It's okay. It's poor. Regulators are working on what they need to do, but they're very unclear, unaligned. The UAE is probably an exception, where they've started with a clean sheet with VARA, and of course we have ADGM and DIFC. The VARA example's a very good one because they kind of started with a clean sheet for a new industry. But in general, globally, regulators are slowing the industry down. They're slowing down innovation. They're slowing down adoption. They're slowing down progress. And it's a challenge. It's a problem for the industry. And they're holding up the industry. So the global landscape is poor. And I think they need to go back to the drawing board. They need to ask themselves, what is the purpose of their regulation? What is the goal? What are they trying to achieve? And try to, a bit like VARA, start from a clean sheet for Web3 and come up with regulations that enable the industry to progress, because there's a huge amount that people want to do and they're being held back by the regulators.
I'd just like to add one thing to that. I think Geoff made some really fantastic points in terms of going back to the drawing board, but I do want to give some recognition to, we feel, jurisdictions, I guess we can say, that have done what we believe is a positive model, where we look at, jurisdictions such as Hong Kong, right? And in Hong Kong FinTech Week, that the government is kind of adhered to sort of what Geoff was saying and went to the drawing board and really touched with some of these professionals to kind of create a framework that enables growth rather than limits it. I think we're kind of seeing that across a lot of Southeast Asia as well, where we look at economies such as like Malaysia and Thailand and Vietnam that has had pretty explosive growth within Web3, and it's really enabled some of these emerging economies. So I think Geoff has made some really terrific points though in regards to Vara and Mika and kind of going back to the drawing board and creating a framework that inhibits growth. So but I think Geoff made some really great points there.
I would also like to add on to that. Like Geoff mentioned, we do Dubai and the UAE is leading on the front of regulations in the world. We are trying to sort of set up be a role model here, and they're one of the first implementers of the blockchain technology in different projects, in different initiatives within the government sector itself, as well as in the collaboration between the private and the public sector. And they're really having a huge ecosystem being set up and being evolved over time. Yep.
Yeah. So since Khushboo, you spoke about that, that's a very good starting point. I would like to start with one highlight here coming from my background. So I've been working in this region on blockchain technology since 2017. The Dubai's first blockchain project was my first blockchain project, which was with Smart Dubai government. I think this is what you're talking about. This was a reconciliation and settlement of 40 government entities and 15 banks, which is still, I would say, proudly say, that is one of the most massive blockchain projects done here. And as we speak, 2017 and today, even the government of Dubai, you talk about Abu Dhabi or other part of the world here, especially the Middle East, most of the initiatives have been done in sync with regulation. How they do it, the fundamental concept is simple. You don't push regulation for your products or services. Identify the user journeys or identify the problem statements which exist today in this part of the world, and regulation is there to support you. I can talk about one very recent use case. Somebody spoke here about fractionalization of real estate. I'm personally involved in one project where I'm working with government of Dubai, and that project we are studying how, for example, everybody speaks about Vara, yes, how Vara is going to tackle that, how REIT is going to tackle that. And since we are talking about real estate, we are also discussing very closely with Dubai Land Department. So you need to understand how the dynamics goes. Definitely nothing will go beyond the governance and policies of a country. You have to see how your product is a good fitment for that. And that's how I think even the leadership in the country is looking at. You have to adapt to the regulation, and your product should not create any sort of security threat or any sort of data issues. For example, as simple as that, the consent of individual has to be protected. That is as simple as that. So yeah, thank you.
Definitely. We definitely are trying to avoid bad actors in the industry, and that's where the whole focus is of the UAE government and the Middle East in general. Even other parts of the Middle East, for example, Saudi Arabia is also on the ahead in the world in terms of regulations. My next question would be to Geoff. In the face of rapidly evolving technologies like DeFi and NFTs, what strategies can regulators employ to strike a balance between innovation and investor protection?
Right. Innovation, NFTs, DeFi, investor protection, regulation, balance.
Yep.
Yeah.
All in the same line.
Sounds like a multi-factor equation.
Yes.
Yeah. No. I think regulators are certainly struggling with DeFi. They're not sure how to manage regulation there, because regulation has historically been managing centralized entities, because our economies have operated on centralized principles like forever. So there are solutions, I think, which can be employed. I think identity is one of the key things that needs to be solved for. But also there's a whole lot of services that may need to be performed in a slightly centralized way, that need to plug in to decentralized protocols or applications, networks. And there are solutions. I think there's the Oracle model is a very interesting model in how to distribute work. And it's used, I think, largely in many cases to bring in data from off-chain or from outside a specific chain and bring it onto a chain via an Oracle model. And it rewards people who provide that data to that chain, for example. But it's kind of a way of outsourcing work. And I think that model could be applied for dealing with compliance and regulatory-related requirements for DeFi, to outsource those requirements to perhaps regulated service providers that can provide the necessary services.
Would any of you like to add on to that?
Okay, so when it comes to DeFi, my perspective is it has to go through an evolution. Most of the projects which are doing very well today, if you look at them, they did not jump into the crypto wagon on day zero. They started with some procedures which were between Web 2 and Web 3. And also, they were still following the regulations of individual localized country. I'll give one very simple example of DeFi. Most of the projects are now going on in the lending solution, building a lending platform, building some sort of tokenized asset, which could be used by an end consumer. Now, in this case, still you cannot avoid KYC, which is knowing your customer. So what most of the DeFi products are doing is they are using DeFi for the fundamental on-chain information storage using decentralized technology, but they are not avoiding the KYC process. And KYC is still happening outside the blockchain layer. So that's how you evolve. Maybe tomorrow somebody will come with a very state-of-the-art KYC solution, like for example, Hyperledger. Indie came where they wanted to have an identity solution built on blockchain. That may happen tomorrow. But today, if you really want to go production, if you really want that, okay, your solution should be usable to end consumer, you need to follow an evolution. It cannot be directly jumping into Web3 on day zero. Yeah.
The next question is a bit sort of a follow-up from the previous one. It's directed to Jake. As NFTs gain popularity, what regulatory considerations should be focused on to ensure authenticity, copyrights, and consumer rights are protected?
Yeah, I think we're sort of seeing a new trend within the NFT space where we're transitioning away from sort of PFP and sort of gaming into these RWAs where we talk about commodities and tokenization of real estate. And so I think we need to sort of re-look at how we sort of see non-fungible digital assets, right? I think there's a certain stigma that kind of comes along with NFTs. And so as the space matures and sort of grows, I think we need to look at the regulations surrounding what it is these new assets are sort of representing. And so really it comes down to how do we sort of classify these RWAs and what sort of structures can we put in place that make it enticing enough and create growth. And I think we really just need to look at consumer protection. I think we've seen so much with sort of PFP NFTs, and we've really seen the demise of the space in a sense where people bought all of these different assets, and now you look at the values, you look at the trade volumes, and you look at these markets. And so I think we need to create a regulatory friendly space that lays out a clear framework and lays out a model that is focused on that consumer protection, because if we don't, the non-fungible digital asset space is as dead as the PFP space. So I think we really just need to re-examine and re-look at how we're sort of looking at these tokenized assets and how we sort of move forward with that.
That makes a lot of sense. And definitely, there definitely needs to be a lot of education, a lot of awareness to be created because, as you said, like NFTs previously used to just be more about artists, more in the art sector, and now we're actually seeing them even in the real estate sector.
Yeah, and just to touch on that, I don't want to discredit a lot of amazing artists and a lot of PFPs. I think you look at things like Bored Ape, which have managed to sort of cement themselves as not only a Web3 brand, but as sort of a mainstream product, right? Where they're doing merchandise with Bape and they're doing merchandising deals with just a lot of like different streetwear fashion. And so I kind of want to create a line there, but I think that we've seen so many things. Like you look at a project like Azuki, where the founders, kind of were not fully honest and transparent in their sort of business practices, and these consumers who are buying these products have really sort of taken the hit, right? So I think as we continue to look forward, and I would love to hear your view on this as well, because I know you're doing a lot in Thailand with tokenized assets, but I think we need to create the framework that recognizes the asset pools that we're sort of moving into. And I don't believe that the regulation, kind of like Geoff was saying before, sort of makes sense for where we're moving. And so I think regulators need to take a hard look and kind of see the trend of where the space is going, and like you kind of were mentioning, real estate. So I don't believe it's just limited to real estate. I think we're seeing a lot within commodity transactions. We're seeing a lot within unique assets, sort of, tokenization of sports cars and tokenization of unique base assets. And so I think we really just need to, as a group and working with these regulators, recognize where the space is moving and create the appropriate frameworks for that. But would love to hear his view as well, obviously coming from the tokenization space of real estate in Thailand.
I absolutely agree with Jake. Like, we are struggling with the real world actualization of the NFTs. Like, NFT as a concept and as a technology has immense potential, but it has been reduced down to like collectibles, PFPs, just like you mentioned, like 8-bit graphics and stuff, right? But like, if you actually see like how you can include NFTs in day-to-day transactions, like NFTs are being used as digital passports these days for antiquities and luxury item trades. Other than that, RWA, real world asset tokenization, has been a huge step that has actually improved the overall standing of NFT in the Web3 space. Like, if you actually go to the core of the blockchain localization when it comes to Web2, NFTs can be a huge game changer if they are implemented correctly. But right now, their use case has been reduced to just like collectibles. Recently, OpenSea, like, it was a quite controversial step on their end. They completely eradicated the royalty program from their marketplaces. So, in my opinion, that is a huge deal, because now the NFTs are not just tradables. Now NFTs need to have a use case that needs to differ from just collectibles and PFPs. And that's pretty much all. And for the real world assets and tokenization through NFTs, it is a very complicated process. Compliance has a lot of loopholes right now, and that needs to be improved before we move on to it. But it has been great. Like, we are currently working with a Web2 corporation that helps foreclosures, and we are actually working on creating a system that will help people deal with foreclosures in a different way. Basically, they won't be able to lose their home. They will have a way to save it before they lose it all.
Yeah, and just one more brief thing to add there. I think as we start to see more sort of smart contract options come, like we've seen ERC 721s and 1155s, where you have these sort of multi-assets that can be sort of non-fungible and fungible as well. I think we're sort of seeing a new market sort of generate where you can have sort of a multi-split asset. And we'd love to hear from anyone else on this panel, but I think the space is definitely maturing in the right way. It's just a matter of getting there. But
yeah, I would like to add one thing. While we're talking about RWAs and how Geoff and Ashish were talking about KYCs, I think one of the main points going forward is actually going to be proof of ownership of these RWAs and how you're going to combine the Web 2, Web 3, and how do you create a Web 2.5 in the middle. So I think that's where we all have to push the regulators to those lines to actually get those, proof of ownerships and the RWAs. And I think that's what the next wave of regulation should be, especially with NFTs and everything else as well.
I have 2 examples to share where the UAE government has implemented NFT technology. So one of them is by Emirates Post Group. So they basically issued a set of 4 crypto stamps in physical and blockchain-enabled form. So these are basically used, these can be used by purchasers to authenticate the physical version of NFC. Basically, this is something that they can use to access documents using their smartphones. And these are enabled using NFC chips, which are connected with the blockchain. And another example is by the Dubai police. They basically launched 150 free digital assets that symbolize values of innovation, security, and communication. They launched it in April this year. So yeah, just wanted to share this.
I think in the early April, there was a rumor that Solaris was coming out with a on-chain ID solution. Basically, like your employee cards can be cloned easily with a magnetic drawer, right? So they planned, like there was a huge theft in the Solaris, the VMware compression. So they are coming up with a on-chain ID solution where you won't be able to clone those ID cards that easily again. So that's also a very real-world use case of the NFTs.
Okay, so I'll also like add upon. So when it comes to NFT, there is one use case which went quite well. It was done with one of the leading airlines in the country and even in the world. We did that 2 years back. The reason, and it worked, I will tell you why. See, NFTs is something which will go very well with the people who understand NFT. So always start with your total addressable market. Whom are you targeting? If you're targeting NFT to someone who is still using paper, it will not work. So this use case was more related to loyalty. And because these people are already using loyalty as a concept, so tomorrow when I was giving them some sort of a digital asset which will trace their loyalty across different sources, it will definitely work. This was one use case. Second use case was for the fan base of a very popular Bollywood movie. You know, UAE is a hub where people do a lot of movie launches. So this individual wanted to also attract their fan base through some NFT because he understood his fan base. His fan base was Gen Zs and millennials. Had it been people who never even use, you know, for example, OTT, for example, how they will even buy NFT? So it comes down to understanding your user base and then deploy something called as NFT. So these are the 2 success stories I know for sure which worked in the region.
All right, we move on to the next question. This is directed to Ashish and Kunal. You can decide who wants to go first on it. So regulatory clarity is crucial for fostering innovation. We all know that. How can regulators effectively communicate their expectations and requirements to crypto businesses, startups, and investors?
I'll take a first crack at this. So at Scallop, we're actually working with the European Commission right now for the MiCA 2024 guidelines. And I think that's one example of how regulators are communicating and working with the industry. Yes, there's giants of the industry such as your Binances, AVAX, all these guys who are part of Blockchain for Europe that Scallop is part of as well. But they're taking inputs, working with us, having these conferences, etc., to communicate and take inputs and honestly take that feedback and help with the formation of the regulation. And I think the only way that regulators can communicate with the industry is going to be by collaboration. There's no other way, because else there's just going to be so much gray area that we see in other countries around the world, and this is the only way, in my opinion. But Ashish.
Okay, I'll say regulators are also people. They are good people. What I've seen, like, so I've worked more than 40 crypto blockchain projects in the region, and all of them with government. You speak about RTA, Dubai Police, Dubai Court, Public Prosecution, Smart Dubai Government, Central Bank. I think more or less whatever blockchain projects have been done in the region, I was part of it. What I understood by each and every discussion that these people want to learn, these people want to understand. But 99% of the people who go to them, they don't do their homework very well. If you're going them to pitch that, okay, I want to tokenize a real estate, as simple as that, at least do your due diligence, do your proper study, get a lawyer. And why lawyer? Because maybe you are a nerd, you are a techie who understands Ethereum very well, Polygon very well, on-chain very well. But do you understand security tokens? Do you understand how technology can be embedded to regulation? The second point is regulators are not meant to talk about your tech or talk about how you do it. They are just saying, I have a checklist, follow the laws, and everything is fine. That's why on one side where Web3 is always seen, where a lot of bottlenecks are happening, but AI has gone little far. For example, they were smart enough to, for example, say that, okay, like Microsoft started with in-country data centers, and the entire AI setup is in-country. Now you can use like computer vision in-country. You can use so many technologies in-country. Why not same things could be done in the crypto space? Let's understand the bottlenecks and derive regional crypto. I know it goes against the academic that crypto has to be cross-border. It should be democratic. But then whatever they are doing for our security. Today, as you know, so many scams are happening, so many bad things are happening under the name of crypto. So it's meant for us. I mean, those are like, again, I'll end the statement with the same thing. They are good people. We just need to understand that why they are doing this. If we go prepared, I think we can crack it. And it's us. I mean, the community has responsibility. Those people have read, the regulation for 20, 30 odd years. But crypto just came in. So we just have to, go little prepared and convince them. That's about it.
I'll move on. And would any of the panelists want to add on to that?
I would like to add one thing. Like he said, about the regulators are not bad people. But like, we are working with a project that is working on-ramp and off-ramp platform for crypto to fiat seamless adoption through banking systems. And we met a regulator from Liechtenstein. Okay, and he was talking about actually regulating DeFi. And DeFi has been infamous for making overnight millionaires, right? And he didn't understand what a smart contract is, what a exploit function is. So I think, like, I definitely agree. Regulators are there to, build systems that are fruitful for the masses. I absolutely agree with that. But I think there's a necessity, like a need, like this needs to be there. A governing body that is taking decisions, the final decisions when it comes to regulations. And I think this will also scale the regulations over a global stage. It would make it like the project owner's life much easier when the compliance is uniform across all borders.
Right.
I could just add, I guess, share experience from the UAE to Kunal's point. We were actually fortunate to be the first company to receive an operational license from VARA back in February this year, I think. So we were one of the early cohort that went through the process last year of sitting down with the regulators and going through what the rule books might look like and what areas need to be covered and how they can be addressed. So our experience was good. We believe the feedback was listened to. I mean, we as a custodian, we sort of stressed that we wanted to see the custody rulebook be meaningful, so that you don't just get a custody license if you have an omnibus account as an exchange. I mean, exchanges need omnibus accounts for liquidity and managing instant trading. That's a special requirement, but for like secure segregated custody, like to be recognized with that license, we were suggesting it should be legally segregated, technically segregated, and that should be recognized as something special. And I guess the regulators were listening, and that's their rule book today, is to have a custody license in the UAE under VARA. You have to have legally segregated and technically segregated accounts, which which means as a client, there's no reserves to worry about. The assets are always yours. They're on your balance sheet, not on the custodians, and you can actually see your assets on chain independently from your custodian, directly on chain. Every second of every day you can see and verify your assets. So that's what the VARA rulebook gives you. So our experience was the regulators were listening, and it worked. But I think the rest of the world needs to. Well, it sounds like maybe Europe is conducting similar sessions, but it sounds like the whole world needs to kind of catch up.
That's true, actually. So VARA basically has, they've sort of segregated or categorized different licenses based on your mode of operation and based on the kind of activities that you're going to be conducting with regards to digital assets and virtual assets. So, and there are also certain free zones in the region where based on different free zones have different regulations and different frameworks and different infrastructures to support what your based on what kind of business you would like to operate in regards to crypto and blockchain. They've got the frameworks in place, and one of the examples is
like you said, like there are different regulations and frameworks to support the blockchain ecosystem, right? This is a huge issue. I don't know like why people don't understand this. When you have different regulations, when you have variance in rules, there are loopholes that can be found. And today, like I think today is the case hearing of the $8 billion fraud that happened over the last 2 years. Sam Bankman-Friedman, everybody has heard about it. So something like this could have been avoided if regulations were seamless throughout all borders. That's what I'm rooting for. Regulations should be same, even like whether it's in whether it's in Dubai or it's in UK or it's in India or it's in Thailand.
It basically should be integrated throughout because
exactly.
Basically the industry itself is so global. Yeah. So having region-wise regulations might not be the best solution. Having actually a global framework around it would be better.
Yeah, I think you made a super interesting point in terms of like finding loopholes and sort of promoting bad actors in the space. I think Alameda, long before the collapse of FTX, had been sort of put on notice. And so I think as a space, we need to do a little bit better in terms of promoting the right people and finding frameworks that are focused on user protection and not as much liquidating the markets, right? And so I think you made a great point, though, in terms of like there is loopholes. There will always be people who try to expose these loopholes, but I think the onus is on us to, people like Geoff, Kunal, myself, and everybody sitting on this panel, but I think the onus is kind of on us to inform the regulators, work with them to try to understand and create frameworks that protect the users and help the space grow.
Definitely, and that's also one of the of the focus areas in the UAE, because we had a lot of, since we know that we're sort of evolving and we're having, the Web3 ecosystem here is very fast progressing. So we the regulations also are evolving based on the kind of businesses that are coming in. There have been obviously a lot of businesses where which were sort of on the dark side, but to avoid the growth of their the bad businesses, they came up with they've been constantly redeveloping and revamping their regulatory frameworks to get the right kind of standards in place.
Yeah. So even there's one example I wanted to quote here for everyone. So as you said, there are regulations being improved day by day. So I do remember there was one initiative where the Dubai Future Foundation, along with World Economic Forum, sat together. I was part of that workshop where we literally looked at that how the governance could be standardized in sync with, for example, the rules and regulations in the European side or some other regions. The purpose was simple because they wanted to, first of all, attract the companies coming from, because many of the companies will have their HQs in Swiss and they want to open a new office here. They cannot run by two regulation because your users could be cross-border. Second is definitely adoption. The country is mostly expat driven. So, I mean, at least the people who are Web3 users. So we have to look from their perspective as well. So yes, I know for the fact, you know, organizations like Dubai Future Foundation, then I'm sure everybody knows about Hub 71. Why you think so many companies are just coming all the way to just getting, you know, them registered in Hub 71? Because the regulations are also suiting them. So yes, I mean, these people are doing their initiative, but like I said, it's us who have to educate them. The redefinition will be done by us, not by them, because they will have their own set of books to read upon, but we have to tell them that why this is important to adapt as well.
So this goes on to as a part of the research process, because they've also they've got like the institutions in place which are focusing only on doing research in this aspect. So that's where when they are communicating with the private sector and with the pioneers in the field, they're listening to them, they're getting their feedback and sort of moving forward with that. Right. Should we move on to the next questions? All right. So the next question's about CBDCs. It's directed to Gaurav and Kunal. So how do you foresee CBDCs coexisting with private cryptocurrencies, and what implications does this have for monetary policy and financial stability?
So basically, before you understand CBDC, you need to know how the banking system works in the Web2 infrastructure, right? So, like say you want to buy a present for your friend, and you go to a shop, you make a purchase, and you give them your debit card. So you would see that the purchase has been made, the balance has been deducted from your account, but the money stays there. It's only deducted from the ledger that is being maintained by the central bank. And the bank the issuing authority of the debit card, the bank you are using, keeps all the transaction history and is binded by an agreement that it cannot share the transaction history with the central bank. So this is the important part of the Web2 banking sector that needs to be contained in the Web3 inclusion as well. Because introduction of CBDC will completely eliminate this privacy factor here. Like so basically you make a purchase through the CBDC, you have a digital wallet, you make a purchase, all the transaction history will be shared by the central bank. And this creates a crisis where geolocks can be implemented on masses. Like in pandemic, there were curfews, you weren't allowed to move around, right? So if you go out, a geolog can be sanctioned, a geolog can be implemented on a person's identity that within the 2-mile radius, his assets will be rendered useless. So that's a huge security threat when it comes to privacy and how individual ownership of assets will be affected by CBDC. Other than that, when it comes to financial stability, definitely a centralized system is more adherent to keeping all the transactions in one place, but it also removes the power from the people.
That's true. That's true, and that's where we want to understand how they both can be coexisting with their.
Okay, a lot of private currencies would coexist, but when you have your stables, such as your USDTs, your USDCs, BUSDCs, USDs of the world, all of those are going to disappear as we see it. By the end of next year or beginning of 2025, you're not going to see any private stable coins in the market anymore. That's what Europe is pushing for right now, and that's where the regulation, MiCA 2024, is going towards right now, right? It's all going to be 1:1 e-money tokens, e-euros, and currently other digital currencies, CBDCs you see, whether it's the digital rupee, the digital yuan, they're still not on chain. They're all in more of a centralized infrastructure right now. So when everything moves over to the chain, e-money tokens, and such, as Gaurav said, also debit cards on chain activities, that's what we've actually done at Scallop, implemented ZK rolled up debit cards on chain transactions as well. So there is going to be a conversion between Web 2 and Web 3, including what Geoff and Ashish said earlier about KYC. But again, all the KYC is going to be happening off-chain, then moving on-chain to the transaction, validating things. But overall, all your private stable coins are going to disappear, and that's my main thing over here.
Yeah, and I hope you don't mind. I'd just like to add to that. Very much agree with what Kunal said. I think governments are sort of seeing a massive outflow of capital, and so for them, it's more about how do we sort of centralize the control. And I think we're seeing a lot of that with like the growth of ECNY throughout China and kind of the growth within Alipay and WeChat. And so, China has really sort of pushed their initiatives forward in a way where they're going to start doing massive amounts of investment with ECNY. And so I think like Kunal said, within 12 months, I think these governments are going to start to sort of try their best to phase out stable coins and start to implement their own CBDCs. So one thing I like to say is keep an eye on ECNY, because to me China has positioned itself at essentially the forefront of creating this digital currency. So
I'm actually very curious to see how ECNY they're going to bring on-chain. So that's going to be a very interesting future aspect from the Chinese government as well.
Definitely. So People's Bank of China has created a fund to now start investing into financial and institutional-based products, where they're looking to actually implement their ECNY for payments and usage throughout banks to try to do these international investments to sort of promote China throughout different regions and such. And so I'm very curious as well to also see the direction ECNY moves, but it seems like now it's really being kind of pushed into that mainstream after a few years of sort of dormancy. So excited to kind of see where that goes and kind of see how that sort of affects where USDT is as of now. But I think, Geoff, you'd like to maybe add something here as well.
Geoff, would you like to add on something?
Well, I guess as Kunal mentioned, okay, yes, of course, once the CBDCs are here, existing stablecoins will have a limited use case, I guess. I guess they'll go out. So having said that, there's still the whole vast array of other crypto assets which enable people to transfer value in a competing way to the CBDC even, right? And this is one thing that the whole, we call it crypto or blockchain, but the decentralized immutable ledger technology is bringing the value layer of the economy all on chain. The internet's moving on chain. Everything, the value layer moves on chain, and there's going to be a wide range of ways people can transfer value, and the CBDCs will have competition, so it will be interesting.
I'd just like to add to that. I think the next wave of innovations is also going to be how we had L2 blockchains come up, such as Polygon, Arbitrum, all these guys. It's going to be how the next wave is going to be how CBDCs are getting moved faster, quicker. As you said, that's going to be the next wave of technology, and that's what people are already starting to focus on, I've seen in certain areas of the world as well.
That's exactly what I was thinking.
All right, looks like we are short of time and we still have a lot of topics to cover. So do we get more time, or should we start summarizing? Right, so can we, do we have time for questions from the audience? Yeah. So we have two of them. Oh, we have a lot of them. All right, so we could probably take one or two questions. Yeah.
Hi, everyone. Hopefully my voice is...
Sorry,
Hi, everyone. Thank you so much for the interesting discussions happen over. I have just a question. My name is Dr. Khawla Al-Harthi. I was leading blockchain in Oman. I'm trying also to empowering youth to starting their entrepreneurships in Oman, empowering women, especially in the domain. And I'm also heading creative technologies in academic institutions. Now, my question is part of technical, where actually we are seeing too much customizations, starting with the blockchain, then on-chain terms is coming on board, then customers requesting for off-chain is also coming. A lot of customization is happening around here in the market. Do you think this customization will change the term of decentralization, will go with the hybrid mode all long way, or it's healthy customization happen around? This is my question. Thank you.
I'll take a crack at it. To answer, I think it's going to be more hybrid, especially what also we're working on at Scallop is integrating your IBAN accounts to your OX address. So you have a high street bank account on chain while you also have an OX address where you can transfer e-money tokens, e-euros that we've created via OX to OX. So I personally think in the future it's going to be a complete hybrid model because it has to be, because you will have to have, again, I go back to my car, every e-money token has to be mapped with one-to-one physical fiat currency. So the only way to do that is to have a hybrid model, if anyone knows.
Okay, so what I've been doing since 2017 is trying to educate government, trying to educate the audiences in the region. And what I've understood from day one, that we have to give clarity on the fundamentals. The fundamentals is, for example, I still remember 100 times I've already said to people that Bitcoin is not blockchain, blockchain is not just Bitcoin. And this is where I have to start every day. So I used to start talking from in the early man, they used to have Stonehenge, which is their currency, and when they used to move, that's how you know this currency belongs to you. So you literally make to educate things on a very fundamental level. If somebody understands decentralization very well, everything else is super easy, I can assure you. And decentralization is, end of the day, is what? It's democracy, which means democratic data ownership. Three things: trust, transparency, traceability. That's where the entire world is bagging on when it comes to blockchain technology. DeFi is just a use case. Crypto is just a use case. Even metaverse with blockchain is just a use case out of it. So my suggestion is, if somebody has fundamentals taken care, I think people will innovate and build a lot of hybrid solution over and above. Thank you.
I would like to add to what Kunal said, that like a hybrid structure would be required. Hybrid ecosystems are always convenient, but they have never shown success in the long run. They are not sustainable. Like, you cannot compete with an assembler language system. You cannot compete that against with what is coming with blockchain, which is like quite reformative, right? So a hybrid structure may be a solution for like next 5 to 10 years, but after that it will not be sustainable. We will have to make a huge leap in terms of technology. That needs to be there. And this hybrid structure, like DPI, if you guys would have paid attention to the G20 summit that took place in India. So G20 is a pretty big thing. It amounts to like 150 trillion of the total world's GDP, right? So those countries, 20 countries, like 2 were not present there, Russia and China, of course. But they are pushing for DPIs. Now, what are digital public infrastructure? Basically, they will involve, they are upgrading the entire banking and financial instrument structure from the old traditional methods to completely digitized network of instruments. So look forward to that. Within like 15 to 20 years, I don't think any hybrid infrastructure would sustain. They all will be eliminated. Like, it might take time, but they won't sustain. So definitely, there will be a huge void in next 5 to 10 years, and this is a great opportunity for builders who want to create solutions to bridge this gap.
All right, I guess we're running out of time. No, okay. They would like to take one more last question. All right, sorry about that. We'll have to wrap up.
Thank you. Let's give a round of applause to our panel. Thank you so much.